more traction on the debt market, not only on the debt.
Access to accurate information and data on African debt markets remain one of the major challenges facing investors. Africa's debt markets could be further developed by strengthening the domestic bond market and by investing in local currency-denominated debt to improve capital markets' long-term resilience. At the just concluded African Financial Markets Initiative Workshop, AFMI, in Dakar, stakeholders addressed the challenges of the financial market sector in Africa and brainstormed on how to evolve it. Today, no one can say that they do not want to invest in Africa because they do not have data. We all know that investors need data before entering the market. This problem is solved by AFMI, which is also working on capacity building. Through events such as this one, it's also working on the implementation and popularization of concepts that are related to the financial market. To further develop the local currency bond markets, some experts suggested that the yield period be prolonged so that African states can issue bonds over 10 or even 20 years. Currently, the states support AFMI. They have appointed agents who are focal points with whom we work. We must remember that in the year 2000, the total bond issued on the African market was $28 billion. More than 200 billion bonds were issued in the year 2016, and the year outstanding at more than 300 billion. It shows that more and more local markets are used by the states. Since its inception in 2008, 8 countries, which includes Ghana, Kenya and Nigeria, have been a part of the initiative. They represent 85% of the African domestic bond market.